Hello friends, this is a video for absorption costing versus variable costing. Now what's absorption costing? It's a total cost technique wherein we say the total cost would be charged as production cost. Total cost is nothing but a summation of fixed cost and variable cost. While variable costs are directly charged to the products, fixed costs are apportioned over different products on a suitable basis. All manufacturing costs are absorbed in the cost of the products produced. Now, what led to variable costing? There were some limitations of absorption costing. So, were they? Being dependent upon the levels of output, which vary from period to period, the total costs are impaired due to the existence of fixed overhead. This renders them useless for purpose of comparison and control. Now, generally, there would be a carryover of portion of fixed cost. That is, period cost to a subsequent accounting period would be carried on as a part of the cost of inventory, and it is an unsound practice. Profit and losses in the accounts are related not only to sales but also to production, including the production which is unsold. This is also contrary to the principle that profits made at the stage when products are manufactured, but only when they are sold. There is no uniformity in the methods of application of overhead in absorption costing. And lastly, the absorption costing technique is not suitable for decision-making solutions because some of the decisions like selection of production volume, optimum capacity utilization, etc. would be practically ineffective in the case of absorption costing. Now coming to marginal costing, it is also known as direct costing and variable costing. What is marginal costing? It is ascertainment of marginal cost or say variable cost and the effect on the profit of changes in volume or type of output by differentiating between fixed cost and variable costing. Here we always take variable costing into account. We segregate all the costs into fixed and variable cost and we take variable cost forward. Now the characteristics of marginal costing. We segregate the total cost into fixed and variable by picking out variable portion of fixed, semi-variable cost or semi-fixed cost also, and the valuation of stocks. All the stocks, be it finished goods, work in progress, is valued at variable cost only. The fixed costs are treated as period costs. Period costs are such costs which would be not there once the period is over. So the fixed costs are treated as period cost and charged to costing profit and loss account of the period in which they are incurred. Marginal costs are charged to products produced during the product period, so they are product cost. Contribution, which is an essential feature of marginal costing, is equivalent to sales value minus variable cost. Now coming to the advantages of marginal costing. First and foremost is it helps in managerial decision making. Secondly, it helps in cost control. It is a way better simple technique than absorption costing. The main feature would be no under and over absorption of overheads. There would be a constant cost per unit, be it production cost or selling cost. The valuation of stocks would be realistic in nature. The marginal costing would help in profit planning, and it is valuable aid in other techniques like CVP analysis. Limitations of marginal costing. It's a difficult analysis to do because we have to segregate each and every cost into fixed and variable element, and sometimes it is a very tedious task. It ignores the time factor. The difficulty in application is also a considerable aspect. Marginal costing is considered to be less effective in capital intensive industries wherein most of the costs are fixed in nature. It is also considered sometimes an improper basis of pricing. Now the main differentiation between absorption costing and variable costing. First basis of difference is separation of costs. Absorption costing makes sure the costs are separated into allocated and apportioned costs. However, in variable cost, segregation is made into fixed and variable costing. Now coming to the second point, product cost. Variable manufacturing overheads are included in absorption costing as well as variable costing. Fixed manufacturing overheads are included in absorption costing, however they are excluded in variable costing. Other costs are written off directly in profit and loss account, both fixed and variable in nature in absorption costing. Other costs are treated as period costs in variable costing and written off in the period in which they are incurred. Coming to the stock valuation, variable costs are included in both the methods, absorption as well as variable costing. Fixed manufacturing cost is included in absorption costing as well as carried forward to next accounting year. Fixed manufacturing cost is excluded in variable costing and it is not carried forward to next accounting year. Profit computation in absorption costing, we generally go by the simplistic profit computation wherein we will be calculating the gross profit as well as net profit. In variable, profit computation is somewhat different. We first compute the contribution and then we compute net profit. So table for decision making, absorption costing based upon all the demerits we have listed above is unsuitable as it is inaccurate. Variable costing is suitable for decision making because it is more realistic and accurate. Reporting wise, absorption costing is generally reported to external users. Variable costing is reported to the internal users, that's management. Inventorization of fixed manufacturing overheads. In absorption costing, we do inventorize the fixed manufacturing overheads as we carry forward the part of stocks which have included fixed cost. In variable costing, we don't inventorize the fixed manufacturing overheads. Hope you understood each and everything. Thank you.